In a shocking report out of the Wall Street Journal, it appears that one of the largest shareholders in the Walt Disney Company, Mr. Ike Perlmutter, has liquidated $3 billion in shares because of Bob Iger's mismanagement. Let's talk about that on That Park Place. Hello, I am Jonas J. Campbell, an investigative reporter for That Park Place. Here with me is Mr. VashSky. Vash, are you ready to talk about the paper of record here for America, the Wall Street Journal?
I am indeed, and more importantly, what is on the paper of record? This is a very interesting story.
Right, let's find some words here. This from Robbie Whalen, a reporter from the Wall Street Journal. Exclusive: Perlmutter sells entire Disney stake after proxy fight loss. Isaac Perlmutter, the former Marvel Entertainment executive who for the last decade and a half has been one of Disney's largest independent shareholders, has sold his entire stake. And that's juicy right there. I just have to point out, he was integral to the proxy fight between Nelson Peltz and Bob Iger in order for Nelson Peltz to get a board seat on the Walt Disney board. He did not end up getting that board seat, but we'll continue on here as Mr. Whalen talks about that. Perlmutter banded with activist investor Nelson Peltz last year in a campaign to secure 2 seats on Disney's board of directors, contributing nearly 26 million shares to Peltz's war chest. In April, shareholders voted overwhelmingly in favor of Disney's slate, effectively endorsing CEO Bob Iger and his management team while handing Peltz and Perlmutter a bruising defeat. Perlmutter sold his entire 25.6 million shares in the months after the vote, according to communications with his investment advisor seen by the Wall Street Journal. I don't know who his investment advisor is at this point. I don't know if it is Nelson Peltz. I don't think it's Nelson Peltz at this point. Famously, Peltz has said, "Who cares if they hand me a check? Who cares if they hand me shares? I will manage it the same way." If there's no mention of Trian, probably not Trian. I'm just acknowledging the possibility. Vash, what do you think about that?
That's the thing, right? So I think if Perlmutter's not part of this fight here, if Perlmutter is out completely, then I would say that Trian's chances, at least waging another proxy battle, I don't know. I don't know how viable that becomes without those 25 million shares.
Right. Well, and Peltz has already sold his entire stake, but at the same time, he's made statements that he'll come back. There's more to this article than just exiting the fight. Let's keep going. He became a major shareholder in the entertainment giant in 2009 when Marvel was purchased by Disney for $4 billion. The shares that he bought then were valued at $26.84. And since then, those shares have gone up by more than $2 billion. Here's the fascinating thing to me. Perlmutter said he sold his stake between early April and mid-July at an average price of just under $115 per share. Now, we were on T3PO, which is an excellent live stream on that pod place that you should all go check out. And we were talking about that 115 mark right there. That would be basically before April 11th of this year. By the law of averages, he would have sold probably half of his shares before that time and half of his shares after that time, but a pretty sizable stake before that April 11th or so time frame here. So that means he got out pretty quick after it was revealed that Nelson Peltz didn't get a seat on the board. That is when the decline started, which now has gone down to like $90, and who knows over the next few days. Perlmutter said in an interview that he sold because he doesn't have confidence in Disney's current management and expects the company's share price and financial performance to decline further. If Disney shares decline to $65 to $75 per share, he plans to buy much of his old stock back. That's an amazing claim right there. Let's just point out 25.6 million shares for $2.94 billion. If the stock price goes down to 65 to 75 per share, which is kind of the way that it was headed before Peltz said that he was engaging in a proxy fight over the last 2 years. He did that around October in each of these successive years here. If it goes down to that level and he buys back in, then Perlmutter would have between 56 to 65% more shares in the company than he had previously. And any movement upward would be profitable to him. Perlmutter and Peltz were quite the pair. When you go through the SEC filings, the two of them worked in tandem while Chapek was the CEO of the company to try to get Peltz onto the board under the threat, by the way. we have a quote from Ike Perlmutter in the SEC documents that says, hey guys, if you're not careful, then Bob Iger is going to be back at the company. So, Perlmutter, he's not dumb here. Vash, what do you make of all of this? Peltz saying that he could be back if we see ourselves in a situation like this in the future. And Perlmutter, it sounds like he's literally saying if the shares go to $65 to $75 a share, that he plans to come back. Is this the end of the proxy fight, or is this a warning shot here?
See, initially I thought, okay, this might be the end here if Ike Perlmutter is actually walking away. But that little quote there suggesting that he might come back if the stock hits 65 or 75, that tells me, oh, he's attempting to get out while the getting's good so that he can, necessarily have more buying power in the future in order to levy even a bigger fight if necessary. That's kind of what it feels like to me. It feels like he kind of understands where this is all going. And it's like, okay, well, if my buying power through my shares diminishes, with the stock price, that's no good. So let's go ahead and get out now. That 115 point, by the way, I mean, that would have been right after, and I mean right after Nelson Peltz got out, right? Because I believe he got out at about 120, if I'm not mistaken.
That's very true. Let's go to this article from That Park Place and see if there's any information in there. This one saying, longtime Disney shareholder Ike Perlmutter liquidates his $3 billion stake in the Walt Disney Company, citing management issues. This by Jonas J. Campbell. Look at that right there. That is Ike Perlmutter, and he does not look very pleased. He's a man who built Marvel into what it was right before the Disney Company bought it. By the way, that was after the MCU had started that they bought it. And look at it now. Imagine that. All right. To go back here, the 25.6 million shares at a value of 115 is almost a $3 billion value. If Perlmutter reinvests that amount, it would grow by 15 to 20 million shares, or 56 to 65%. During Nelson Peltz's second proxy fight to obtain a seat on the Walt Disney Company board of directors, Perlmutter entrusted his proxies to Nelson Peltz's Trian Fund Management. During the proxy fight, Disney shares rose from a 52-week low of $78.73 in October to their highest point in April at $123.74. The exact moment that it was announced that Nelson Peltz had lost his proxy fight, shares in Disney began to decline, and that decline has continued over the last several months. This is an amazing amount of money right here. Let's see. Let's go over here to Yahoo Finance, and we'll just pull up the Disney share price here so everyone can see just how small that window was. Just go over here to year to date. Here we have the start of the year at $90 a share. If you're following our stock analysis, you've already seen this. But if we go right here, that's May 6th, and that's the highest latest point right here, May the 6th. And right here is April the 2nd. So if we're talking about this getting down to $1.15, he's only got about till right here before it's above $115. And that is, by the law of averages, that means half of the shares have to have been sold at that price or above. So everything else, the slow decline of the remaining, 13 million shares would have been over this period. And there is confirmation that some of those shares were still sold in July here. So a lot right at the start and down this way. Dollar cost average of selling, $115 there. The next thing that I want to propose to you, Vash, why do you think this information has seen the light of day right now? Because I don't think this information would have seen the light of day unless Ike Perlmutter wanted this information to come out.
You know what? That's an interesting idea because, I mean, apparently, if we're looking at those law of averages and where he might have gotten out, it's kind of weird how this information gets out right now. We do know that Safra Catz just recently left Disney's board, but they shrunk it behind themselves down from 12 to 11 in order to, what we think, to stave off anybody attempting to get a board seat on Disney's board. So, I think that may have something to do with it. I think it's also important, Jonas, to point out who exactly Ike Perlmutter is. If people aren't familiar with the person himself, Ike Perlmutter comes from the Marvel wing of the Walt Disney Company. He was actually part of the purchase of Marvel. He kind of came with the package deal right there. And at the time, they had assembled a structure in which Kevin Feige reported to Ike Perlmutter, and then Ike Perlmutter reported to Bob Iger. At about that same time, Jay Rasulo and Tom Staggs are actually switched in their roles from CFO to Disney Parks experiences and vice versa there. And the reason I bring that up is because, well, Ike Perlmutter would have a very big effect on how that whole thing went. So in about 2015, 2014, there is some big shakeups at the Walt Disney Company, specifically within Marvel, in that Kevin Feige is now part of this restructuring process in which now he reports directly to Bob Iger, effectively getting around Ike Perlmutter completely. Ike Perlmutter then takes it out on the company by suggesting that, hey, you know what, this Tom Staggs guy, he's not the actual guy for the next CEO job. It's Jay Rasulo. He's the guy to lead Walt Disney Company in the future. And I believe he teams up with Lauren Powell Jobs, Steve Jobs' widow, to make that possible. Once it's clear that Jay Rasulo doesn't have the job, well, Jay Rasulo leaves. And then once Ike Perlmutter essentially upsets that established order, then Tom Staggs actually leaves. So this goes back way far in terms of the bitterness that is generated from the Marvel purchase until now on Ike Perlmutter's side and Bob Iger as well. So that's kind of the backstory here, even before you get to the proxy battles, which we have come to know and love today.
Right. And you know, after Christine McCarthy left the company, when maybe was asked to leave, I'll say that as well. She was CFO of the Walt Disney Company. And then some things happened that we'll say destabilized the financial futures of the Walt Disney Company, like maybe the Fox purchase, that maybe she didn't necessarily have a lot of say in whether or not Bob Iger forced that to happen. After that, there are layoffs and Bob Iger lays off Ike Perlmutter. Well, then Ike Perlmutter goes to the press and says, no, I was not laid off. I was fired.
Yes, I was fired because, well, I had different opinions about how these Marvel productions should actually go. And it's probably one of the reasons why they changed up how they did business over there at Marvel. And obviously, Ike Perlmutter maybe not in favor of some of the Marvel releases that were coming out, understanding that, yeah, it's, you know, you talk about box office gross here, but we're spending huge amounts of money on characters that maybe not have the best marketability. Now, at the time, it was like, oh, that's just biased Ike over there. You know, that guy, he's old hat, he's old news. And now when we look at Marvel's slate of films recently and the viability of a lot of their product, it's like, maybe Ike knew something about this that these people at least felt that they knew better than him. So that's kind of what's going on there.
Yep. And I just want to emphasize right here, when the Wall Street Journal says if Disney shares decline to 65 to 75 per share, he plans to buy much of his old stake back. That is a statement of intent. It is not observable to say that Ike Perlmutter did this, Ike Perlmutter did that, Ike Perlmutter did this. That is a statement that implies access and knowledge of a person's motivations there. So, you know, read into that what you will. That being said, we want to ask our commenters here, do you think the proxy fight is over, or do you think it is just another step in the inevitable removal of Bob Iger as the CEO of the Walt Disney Company? At this point, you know, obviously he's supposed to be leaving, but he doesn't seem to act like he's going to be leaving. So, like this video if you like this video, and consider subscribing to That Park Place for all the news that should be fun.
Thanks for watching That Park Place News. For more information, consider checking out www.thatparkplace.com. And don't forget to subscribe, share, like, and send this out on your favorite social media accounts.